This is the European edition of Breaking Banks, the world's #1 FinTech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving FinTech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the FinTech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing FinTech plays in the world today. Okay, let's roll.
Welcome to Breaking Banks Europe, episode 82, Journeys from the FinTech World, and today we're focusing on Canada. My name is Meaghan Johnson, your Breaking Banks Europe co-host, and I'm joined by Ranjit Sarai, VP Digital Banking at Credit Sesame, and Jan-Christopher Arp, founding managing partner at Holt XChange. Thank you so much for joining us. Ranjit, let's start with you. You have quite an interesting background. So, could you explain to us a bit, your experience within the FinTech or digital banking world and what you're doing now at Credit Sesame?
Yeah, sure. Love to. And let me know if I ramble on too long, but I spent a number of years, probably 10 plus years in traditional kind of banking, retail banking. I worked at CIBC, one of the largest banks here in Canada. And then recently after that at President's Choice Financial, which is kind of a retail bank similar to, Tesco. Maybe the European audience might be familiar with Tesco and Tesco Bank. Similar kind of set up with Loblaws and President's Choice Financial. And in both roles, jobs, my role was really on digital, developing digital platforms, mobile apps, really from a product management and strategy perspective, and then running large scale digital transformation initiatives as well. And then about 3+ years ago, and again, with COVID, it's hard to remember if it was 3 or 4 years, but I think it was around 3+ years. We, two friends and I, started a company called Stack, which is a challenger bank in Canada. And so we started and launched Stack. I came from retail banking. My other co-founder, Nick, was from MasterCard. And our other co-founder, Miro, came from banking and payments as well. So we all had a background in our day jobs, and we decided it was time to launch something of our own. And we scaled that up, went through going from 0 to 50,000 plus customers in a short amount of time and scaling that business up. And essentially, we started to move from being a consumer-facing challenger bank to also offering white label services. And so we started powering other businesses here in Canada. We started working with credit unions, and we worked with a company called Solero to launch a payment product for their credit union members. And then during that, we expanded to the US through a partnership with Credit Sesame. So Credit Sesame is a fast-scaling FinTech, Silicon Valley-based venture capital-backed company in the credit space, and they want to add banking. So we partnered with them. Long story short, that partnership grew into an acquisition. We saw eye to eye on many of the things that they were working on and the vision and strategy laid out by their CEO, Adrian. And we felt that it was time to join forces closer. And so we got acquired about a year ago, and at the same time launched Sesame Cash, which is a digital bank in the US. And so, the team in Toronto still operates fully in Canada. We operate Stack in Canada, our white label services in Canada, as well as the growing Sesame Cash business in the US, all under kind of the Credit Sesame Canada business unit at this point. So fun times, and things move really quick in the FinTech space. So, that's kind of a reflection of that, definitely.
Definitely. I mean, wow, quite the journey. I have quite a few follow-up questions about, kind of the profile, and also, this whole, how closely the US and Canada work together. But before I jump into all my questions, I'd like to welcome Jan, founding managing partner in Holt XChange. Jan, can you tell us a bit more about your experience and what Holt XChange does?
Sure, happy to. So always in finance for the longest time. Eventually, I really wanted to help out the entrepreneurial side of things. So leveraging my finance background, I'd helped a bunch of early stage companies, about 15 or so, raised about 20 million bucks and helped companies go from sort of nothing to Series A. In that process, learned a lot about, whether it be government grants or angel investing, institutional financing, debt financing, all those things. Realized the challenges of helping support those companies, but also started uncovering what I was doing in some ways to automate that process was kind of called FinTech. So 5 years back, there really wasn't a strong sort of FinTech ecosystem, I'd say, in Canada. I think we've kind of only seen it really emerge in the last 5 years, more for the masses, shall we say. Yes, there has been FinTechs prior to that, but just the overall number of companies and being more well-known. We started an organization, a nonprofit at that point called FinTech Cadence to really help kind of the grassroots movement, the thought leadership, and help to assemble a community of people for which FinTech projects could start. So kind of challenge-driven innovation, leveraging corporates and academia and even entrepreneurs who want to be entrepreneurs to get started in the field. Through that, did that for several years and passed it on, keeps going well, and helping to better also unite the Canadian ecosystem, because I think there still remains some challenges across provinces for us to better unite, especially in a world like FinTech where jurisdictions and regulations play a key piece to hurdles that must be overcome for those FinTechs who are looking to come into it. Through time, though, I bumped into a fifth-generation family. There's several of those across Canada. This was based on the legacy of Herbert Holtz. So he was, living the Canadian dream. So was Irish immigrant in the late 1800s and did quite well for himself, about 300 businesses under his name by the end, and had things like was the longest serving chairman of the Royal Bank of Canada for over 30 plus years, as well as started something called Light Heat and Power Company that's now known as Hydro-Quebec. So anyways, 5 generations later, that family is still investing directly, investing into funds, invested with the Adidas family out in Europe for the Adidas, the lead sports accelerator, and then said, hey, we want to do what we know, which is finance, and we want to start something there. And so we teamed up together. And so for the last several years, we've been focusing on the top companies. We've done about 27 investments. And one of Canada's probably most active early stage investors, really looking to help companies cross that very difficult chasm, especially what's very hard in the FinTech space. Really looking for companies that's a fit with now our 500 advisors. So those advisors represent financial institutions, investors, experts, really helping them get plugged in and make some deals and have a lot of fun along the way. So that's a bit of a rundown of what the track record to date and what Holt XChange is up to.
Cool, thanks for that. And so, you mentioned that it's only really been the previous 5 years in which there's been an emerging FinTech scene. What were some of the challenges in the catalyst for kind of, creating this FinTech ecosystem in Canada?
It's a great question. I think if we look at what happened in the U.S., more of this really started to come post-financial crisis. So 2008, you saw a huge wave of new companies that emerged. I feel like that didn't quite hit into the Canadian front. Just sheer number of new companies created, those that are tracking those indicators, at least that we see, there was a large increase. Probably the biggest peak was probably around 2017. So there was like a pyramid of companies that increased up into that point. It's actually has been dropping since. So every year it's actually been reduced. Now it could be that more and more companies are operating in stealth mode, but it could also be just a drop in the number of companies and the creation thereof. What we do potentially expect, obviously, with this new economic situation, that new companies should be created. And we're starting to see more of that as well. I think those are some of the key aspects. But then there's been an emergence of new investors, funds, tailored to specifically the FinTech ecosystem. So recognizing that there is an opportunity to invest in the space. Obviously, Holt XChange is one of them, which we've done several years back, but a whole slew of them. There was like First Capital Partners, Diagram, and the Portage Group, backed by the Desmarais Group. There was Framework Ventures, a new fund called Luge. We saw the spin up of new funds, specifically under corporate venture arms, whether that be like from National Bank side of things, but we've also seen it it across the country from other big corporates as well. Part of that was attributable, I think, to the VCAP program. So there was the government sort of said, hey, you have to invest into this fund to support startups. And in doing so, they started backing some fund managers. So that started providing more capital into the space. There's still a long way to go. I still think there's much more capital required, but I think we've come a long way in the last 5 years.
Okay, cool. And Ranjit, I mean, when did you get started with Stack? And I guess what were some of the challenges as one of these kind of earlier fintechs? And yeah, I guess what are the regulatory hoops it takes to create a challenger bank in Canada? Because, the UK FCA and CMA has made it super easy to create a challenger bank. So what was your experience like?
Yeah, I would say, and I agree with Jan, I think this all kind of started 5-6 years ago. And I think, it was a combination, the perfect storm of the right. Toronto's a hub for fintech just because the banking sector, all the big 5 banks are kind of headquartered in Toronto. Montreal is a huge hub as well for emerging financial services, but also data and AI. So you have these 2 powerhouses backed by, just the ecosystem of universities and talent that's here. And then as the capital started coming in, you saw more and more companies. That said, yeah, it's definitely a challenge, right? 5 years ago, it's not the same as today. Even 3 years ago, it's not the same as today. I think one of the things that COVID brought is that this acceptance of digital, all things digital, right? And leapfrog, every vertical from healthcare to education, financial services jumped 10 years in the future over the course of 6 months or 12 months. So, I think the stage is different now. But getting back to your question around regulatory, we had the advantage. Like I said, I'd spent 10 years in banking. My other co-founder was a VP at MasterCard, knew the payments rails. Another co-founder, similar background. So we came in saying we could launch this, in 3 to 6 months. It took us a year and a half, despite knowing everything, like who to contact, working with partners. So it's always harder than you expect. I think a big part of it is regulatory, but one of the benefits, how we built Stack and how a lot of challenger banks still operate is leveraging payment rails to build banking services, right? So you leverage Visa, MasterCard rails to build a banking service. Very different than a traditional core banking platform that's more kind of a different type of beast. So that helps in certain instances because the payment rails are a little more advanced than the banking infrastructure typically. But that said, still a long ways to go. I think Jan will be able to talk a bit more about open banking and the initiatives, but we are, looking to the UK and seeing kind of the stuff that's happened there. A bit jealous. I think we've been pushing the government here. There's been a few iterations. The finance minister and others have signaled that they want to have open banking. The funny thing is we did a large exercise in open banking, and the big outcome was that they had to change the name because so customers actually don't want to, when you ask someone if you want open banking, they get fear, right? Because banking is something that's very personal and it's about your money. So I think one of the big outcomes of the open banking phase 1 initiative was to just rebrand it as consumer-directed financial services, something less scary for the average consumer, which is it's a good finding. But we wish on the technology side and the fintech side things would move quicker. There's solutions out there like Flinks and based in Montreal, obviously Plaid, that could enable it. But these are still ways that are kind of going around open banking, right? So they achieve the same goal, but there's obviously risk and stuff like that. So a true open banking platform, like, how it is in the UK, access to the Bank of Canada, things like that, having access to the rails would be a huge benefit for companies like us and other fintechs as well, right?
Okay, yeah. And Jan, I guess, so what are the types of, the startups and fintechs you're working with? Is there one kind of sector that they tend to fall into? Is it more PFM? Is it more on business banking? Where are the main pockets of innovation? And I guess, how does this, I'm not going to say open banking, but consumer-directed financial services, how are fintechs reacting to this?
Yeah, it's two big questions. So I'll start with, I guess we have kind of big buckets that how we see the world. So we're trying to look at what finance is about. And I think there's kind of four key areas. So there's IAM, right? And that's kind of like the regulation and digital identity. And we've invested a lot in those spaces. So to give you some examples, like owl.co based out of Vancouver, just with your name, I can get up to 70 data points. I can better profile you and I can use this for different ways, right? So like who you are, right? So that kind of under the IAM. They've found a really good, strong niche product actually in the insurance for the fraud prevention on the claims side. Another example is we worked to found a company, Mexico-based Mat.ai, which is a digital identity company. So better protection, way to house your data, a sort of a wallet for it, if you will, and giving the rights of that data to the consumer itself. So a little bit forward thinking. In fact, we actually were looking how we establish it into the North American and Canadian market. And I just think we're not always perfectly set up for that. So they're actually doing very, very well in the Latin American market and setting, and getting ready for the tailwinds of things like open banking or the principles of GDPR and how that would affect the way that data is held and moved. Other buckets I have, for instance, we look at iSave. So whether that is in capital markets, whether that's in banking services or PFM. So if we look around, like I'll give you an example of capital markets. We played in a company called Fundseeder. It's backed by Jack Schwager, is one of the founders, and he wrote a book on it called Market Wizards. But essentially, it has about 17,000 traders on their platform, and they're tracking all those traders and they're ranking them, and so putting them in order from 1 to 17,000. But obviously, it depends on your strategy and what your risk tolerance is and what industries you want exposure to. But what they did find is when you have this information, of course, the traders love it because they can better see how to improve, and they're competitive, so they want to know how to do better. But if you have this information, you can identify the top traders and provide them funds, but as well as create a portfolio that sort of matches the top strategies for, let's say, the top 1% or top 5%. Flipping over, we were very heavy in the I borrow category, so lending. We had good partners like Fairstone Financial, who've been with us pretty much right from the start. And so we were interested in many different areas. But to give some examples, one example is in the real estate side, shall we say, and the mortgage side. We actually were interested very much on the Sharia compliant financing. And so there wasn't anything properly set up in the North American market to cater to this demographic. And so we backed a company that really understood how to meld the two, Western and Islamic principles to be able to provide a debt solution, for lack of a better term, so halal financing, as they call it, so that they could better serve this market, and have been doing fantastic. And it doesn't end there, actually. You can provide Sharia compliant all kinds of banking products at that point, but they're starting with the mortgage market and doing fantastic. Lastly is I'm protected on the insurance and cybersecurity. So I'll skim over that because I think I've gone a little bit long at this point, but I think that gives you a flavor of all the things that we've done 27, right? So that was just an example of some of them.
Super cool. And Ranjit, what does the kind of neobank, challenger bank landscape look like in Canada? Were you one of the first, one of a few, and how is that whole space playing out? And who's like the Monzo of Canada?
I would say we're one of the few, right? So the other ones are there's Coho in Toronto, there's Mogo based in Vancouver, and some of these have started to now scale up, right? So Coho, Jan mentioned, Power Financial is a large financial institution, family fund kind of company with Portage, their VC arm, and they funded companies like Wealthsimple, which raised a massive round now, $5 billion plus valuation, and Coho's also scaling. We were fortunate enough to be part of an accelerator as well, similar to Jan's, based in Silicon Valley, so plug and play. And that's what got us the connection. So the power of an accelerator is massive. Jan mentioned he has 27 investments in this round. When you add them all up, that's a huge ecosystem, right? So the same thing happened to us with plug and play and getting connected to Credit Sesame. Just touching on kind of what you were asking before on some of the big trends we see. It wasn't until we kind of joined forces with Credit Sesame that I realized, the credit score is so powerful in a consumer's financial world, right? It's that one number. Literally, it's one number that could change your life. So, if as that number goes up, life gets easier, meaning your loans are cheaper, access to more products. And the reverse is true, unfortunately. As that number goes down, you're now paying 20, 30% interest rates, right? You're not be able to access stuff. And it's been an eye-opener for me. Again, now we have a North American view, so Canada and the US. But to be honest, Canadian customers, Canadian residents are just in this almost the same predicament as the US, right? More than half of Canada lives paycheck to paycheck. So we might be privileged here, taking for granted our credit score and our finances, but the average Canadian lives paycheck to paycheck. So the difference could be, being able to rent an apartment, being able to get a repair done on an appliance, So I think the credit capacity and the credit score, that type of stuff, you mentioned PFM, that's your one number that's going to, help or cause you pain down the road. So we see stuff like that becoming more and more interesting in this space, and we're definitely working towards that.
Yeah. I mean, I think also something I'm seeing quite a bit in Europe is the power of open banking in the SME and business space in terms of, using account data and other aggregated data sets from businesses to help create, a better credit score, new products and services around trade and finance management and everything. So I think, the credit score and this whole concept of, credit is absolutely pivotal for consumers and businesses. Before we go to the break, I just wanted to finish up with one question. How do the traditional banks, the big five, how are they reacting to, the new challenger banks, the Fintechs? Are they wary of them? Are they quick to partner with them? Are we seeing, a lot of partnerships between bank and Fintechs? Are they indifferent? Jan, maybe if we can start off with your perspective on that.
Sure, I'm happy to. I think, especially 5 years ago, it was a different world. I remember speaking to some financial institutions and getting a lot of aggressive pushback that I'm helping foster competitors to them. And it was a little challenging. It wasn't everyone, though, so keep that in mind. But I think we've come a long way, and there's still a bit of that, but I think there's more of a willingness to adopt. That said, Canada has definitely a large proportion of how arguably oligopoly style banking system, so less competitive, which means less feet to the fire to, create a sense of urgency to innovate and therefore adopt. Now, I think it has substantially improved, and I think increasingly the memo was getting out in terms of adoption of banking products, and you're seeing different ways that they're doing so. Some ways are working better versus others, whether it be innovation departments, or I usually find the corporate venture capital arms tend to work better just because I'm big on incentive mechanisms and those who work in those spaces and then if they were to invest and have to do so in a strategic fashion tends to yield better success, it seems, especially strategic returns. And we're seeing that beyond the big five as well. I still think there's a lot more that can be done. And I think areas that you just look to on the European front usually is a good example of big on the idea of open innovation. And I think a lot of the models have been done and tested on the European front. And I think they've even learned from it and really understood how to better optimize all these different models and are seeing more success in terms of the way. So create an even more competitive environment for fintechs to collaborate with the big banking sector.
Cool, definitely. And Ranjit, you went from traditional banking to creating a fintech. What was that experience like? Did you burn bridges with old colleagues, or was everyone?
They're sometimes envious, but I think I agree with Jan. I think the pressure is not here yet for Canadian banks. They're very, very well insulated to a large extent. They've all done labs and digital labs, and I think where they are succeeding is in kind of some of these smaller partnerships that they're doing. But there's still that mentality of we can build it ourselves. If you go talk to a bank, they're not under the same pressure as Jamie Dimon, right? At JP Morgan, he's like, fintechs are here. We should be scared. That level of awareness has not reached, because to be honest, in the US it's still different, right? Chime is a $15-20 billion company, millions of users. And so those are real threats. I think it's going to come in Canada. The awareness is not there, I would say, with all the CEOs, but there are some banks doing some interesting things. Like RBC has a ventures group where they spin off small companies as little startups, and then they spin those off and they see what works. Okay. TD's doing interesting things. All the banks are kind of tiptoeing and dabbing in it. I think they went from phase one, which was like building labs. Now it's more around some competition, and we have yet to see massive acquisitions or things like that from the banks, or even a call out. But I think it's coming, right? At the end of the day, it's just a matter of time, I think.
Okay, super. Okay, so that wraps up the first half of the episode. We'll go to a quick break, and then we'll come back and talk a bit more about the profile of the founders, who you look to for inspiration, and what the future of the Canadian fintech ecosystem holds.
The FTS Fest is back. As 2021 develops, it will become more and more apparent how this year can truly mark the start of a second fintech revolution. Starting with a focus on sustainability, financial inclusion, and impact investing, topics that today must be considered transversely. We'll explore trends that are already shaking up the industry, such as embedded and decentralized finance spotting. Be part of the Fintech Revolution 2.0. Join ftsfest.com.
Welcome back to Breaking Banks Europe, episode 82, Journeys from the Fintech World, Canada. So Jan, what does the profile of the typical fintech founder look like? Are they, traditionally former bankers now playing in the fintech space? Are they kind of, older and more experienced? Or are we seeing, 20, 22-year-olds looking to get into this space?
Great question, and we see a bit of everything still, right? So you do have some who are very seasoned and domain experts and know the space very well, and are investing their own money into something they truly passionately believe in. So that does exist. We've seen others who were experts in other areas. If we spoke about, for instance, profiling, right, and that's key to understanding for a bunch of different reasons, right? And we talked about credit scoring previously, but you can also use it for fraud prevention. Well, we've seen people who are really good experts in the ad tech domain, and so leveraging that, so industries, comparable stuff to bring it into a new space. We have seen young individuals who've also targeted themselves, just young emerging talent who've either faced the industry themselves head on. So we actually seen it. I'll give you a couple examples. There was one where we backed a company called Kuru, but these were really bright kids on scholarships that actually still struggled to get credit. So they became certified credit consultants, and then productizes this whole system and helped a bunch of people at scale, and then launched this company called Kuru. So they had a deep understanding of the problem and how they built it out to build that passion. And we've seen it in the crypto space. I mean, at the end of the day, there's a lot younger individuals that are in the space. We're actually seeing more of the traditionals having a more challenging time of accepting to a certain degree. But those, if you are 5 years in the business of crypto, you're kind of a long time in the space. So we have seen some also in the younger who are in that space. But then other than that, it's your kind of traditional stuff that you might look for in any other space. But I think that kind of gives you a range of stuff that we would look at in the fintech space.
Cool. And Ranjit, when you were launching Stack, how receptive are Canadian consumers to new products and services? We talked about the rebranding of open banking. Was it a struggle to convert customers? Also in the UK, I think there was a statistic that people are with their bank longer than most marriages. So, quite hard for the UK banks to get customers to fully switch. So what's the consumer appetite like?
Yeah, it's a great question. And I was going to say most people probably still have the bank account that they had when they're 16 and maybe their parents told them to sign up, or there's their parents' account. I think that's still the case. I think Canada's probably 95, 98% banked in that example where everyone has a bank account. But what we're seeing is, and like we saw in the UK, where some of the fintechs are kind of the place where you put, some of your extra money aside, or it's kind of shoebox accounting where you have your main account, you have your secondary account, third account. So that's, as a company, consumer facing company launching, it is very challenging, right? So how do you kind of grab someone's attention? You have limited budget, you have limited resources, you're facing banks that pay, $500 to get a checking account, right? So we had to use some interesting tactics. So the strategy was really to create a bank account that rewards you. Again, leveraging a payment rail, we had the benefit of things like interchange that could drive revenue. And so we said, we'll create a bank account that just rewards you. And there wasn't really a debit account before that gave you rewards. And then we used like some tricks like from behavioral economics, right? So we learned pretty quickly, and we asked customers this. And the fun thing was we got really engaged with a lot of universities and campuses, and really got to understand our customer really well. But an example I could give you is like if you gave a customer, $150 or $200 sign up for a checking account, they might be interested. They might do it for the money. Or if you said, we'll give you Netflix free for a year, they would jump on it, or Spotify. And the funny thing is, or Amazon Prime. And the funny thing is that like from an accounting perspective, actually costs, from a financial perspective, actually costs less. Like to give you Netflix for a year actually costs less than giving someone $200 or $300 for a checking account. But the customer values that more. The perceived value is higher. So you got to like think a bit creatively. You got to use, behavioral economics and things like that. Obviously with the Netflix, it's a more of an advantage because you have a customer for a year. As long as you pay the account, you get the rebate. And so you get an engaged customer for a year versus, banks are throwing out like $200-$300 and giving iPads and stuff. So we're able to carve a niche out using tactics like that, obviously leveraging social heavily, using campus ambassadors. We had an ambassador program. So a lot of growth kind of tactics had to kind of come into the fold. We couldn't rely on the traditional media, traditional way to acquire a customer, right? We didn't have the budget of $100, $200 cost of acquisition per customer like the banks do, or probably even higher if you include all their media, right? So yeah, just thinking differently and being able to operate in that manner helped us kind of grow.
Okay, super. Yeah, anything to add on that, on consumer appetite for fintechs in Canada?
It's a great question. I think it's increasing. I think we're being more aware of what is available and what we can use. And I think, even thinking back a couple of years ago, I don't even think we were aware that we were using financial fintech related products, right? So and what is the things that are available? Of course, there was a lack of ways of services available to potentially use. I really like the points that was brought up by Ranjit about like getting creative with solutions, but it's really about speaking better to the profile of who you're trying to serve in this case. And we've seen it. It's easier said than done, right? It's not, it's not just a marketing, like there's engineered marketing. There's, as you mentioned, like behavioral side, like what incentivizes the user to do it and really understand the community that you're serving. We're seeing a full wave of that. And these are niche areas, so to speak. And I'm leaning on niche because they're not that niche in some cases. These are big demographic groups. And I'll, flip back again to the idea of Manzel. And it was really understanding how to reach out to that demographic group, make the product that actually is properly Sharia compliant, not partially, and being able to engage them in a manner in the channels for which they want to be engaged, have the right spokespeople who represent the products themselves, be a part of that and how they built it out. And so we see that in various ways of any time we're talking consumer, it's truly understanding the channels where they want to hang out and providing them the content that they want to see at the right time.
And how is the relationship between Canada fintechs and US customers, or US fintechs and Canadian customers? I know there's one challenger bank, I think it's called North One. So they're based in Canada, servicing US customers. How does that whole kind of dynamic play out?
Yeah, I could start there because we're based in Canada and we're working on Canadian and US products. I think a part of it is just the talent, right? So I think any company now, especially with COVID, and we're kind of shifting to hybrid and remote, there's a huge race for talent. And I think what's being recognized, and you see it popping up all over Toronto, Waterloo, Kitchener, these areas, and I'm sure in Montreal as well. You're getting the big tech giants setting up shop and hiring tons of engineers. So fintech isn't immune to that, and financial services. So yeah, I think what you're seeing is it happening both ways. There's companies based in the US that are basically hiring talent. And it used to be, Canada was a region and it was like a sales market, and you'd have, a couple of salespeople and you'd sell products. But now it's like core development, engineering, product management, product strategies happening from Canada. That's definitely the case for Credit Sesame. We have a team of over 100 people in Toronto. And again, we work on Canadian and US product and strategy. My team is across Canada and the US on the product side. And then you have companies like you mentioned, North One and others that basically are started in Toronto, but basically are looking at the US market as a huge opportunity and going straight to launch products and services there. So I think, you're seeing both things happen. Being in the US market, it's not, the grass isn't always greener in the sense of it is a bigger market, but there's also a lot more competition. And so we had the benefit of having a brand like Credit Sesame. It's been around for almost 10 years, 10 million plus customers. It's a known entity. It's difficult, if you're an unknown entity, to try to launch in the US. Yes, the market's larger, but you're faced with tons of competition. There's 10x number of fintechs there for sure. So just be cautious of that. But yeah, I think you're going to continue seeing this trend happening just because the talent is here. There's a huge concentration of talent in Canada.
Yeah, I agree with a lot of the points. I can only maybe provide a little bit more context. So we've seen it from when we're targeting the internationally for the best companies that are fit with our market. We still get a big proportion of make investments into the US as we're trying to establish them, certainly on the Canadian front as well. And access to talent was a great piece to it, anything especially data science related, and we have strong talent on the Canadian front. But affordability is fantastic, right? Like already a 20% discount right now just in terms of the exchange rate. And then you throw in a lot of things like Shred, which is some of the bigger ones, or other grants, you could be getting another 50% off. So we're talking up to 80% if you're actually headquartered and established here. So what we've seen is, and from experience, I remember going into some of these way back in the day, other investments, getting other investors for other startups I was working with, and being like, wow, your team is like 3 times larger than we would have expected. Like, how is this even feasible? And there's lots of ways where the affordability the dollars just go substantially further. And it's not that the talent is 3 times worse, right? It's just that you can afford a lot more in this particular case. The other side, every Canadian company, for the most part, not every, sorry, I'm overgeneralizing, but more often than not is looking at ways at entering the U.S. market. And there are other markets outside the U.S., and I think we do need to start opening that up to figure out what is the best. It's not always necessarily the U.S. market, but it's going to be 10 times bigger. So, and I think, Ranjit, you touched some good points on it, but I think we've also realized in the last little bit that we can build unicorns in Canada. 5 years ago, we were asking, are the unicorns coming? And here we are, right? We've now seen that they've all kind of blossomed at the same time. For us in the space, we just figured it was a matter of time, maybe biased. Well, we were optimistically biased that it was going to happen, and it did, right? It all kind of came. I do want to talk about the North One situation, though. So these was the company that was backed by the First Capital Partners, or one of the players that I'd mentioned previously, as the capital went into it to like the Foundry model. They started actually in the Montreal ecosystem, but the challenge was finding a banking provider to support them in what they were trying to do. Shifted to the Toronto side of things, and still struggle to actually launch in the Canadian market. So this is a story of them having to go to the US because of the inability for them to get launched in the Canadian one. So that was an unfortunate story for Canada, because we still have a huge gap in serving small businesses right now. And so this is something where the jurisdiction, the regulatory environments of our areas have caused it challenging to be able to whip together, let's call it, I guess, a challenger bank that would serve corporate small businesses in this case. But kudos to them to continuing to persevere, like any great founders and entrepreneurs do, finding that path to be able to do so, and staying here in Canada as they're still true to their roots and wanting to continue to build here to serve other markets. Yeah.
So then I guess the question is, do you think, is there also a lack of maybe bank as a service providers in Canada that are, Yeah, because I mean, in Germany in particular, where I'm based, we have basically Solaris Bank, which powers like every single niche bank and mobile-only bank here in Germany. Also, yeah, providing some, embedded finance solutions for some other companies. Is that kind of a challenge you see with Canada?
I would say there's probably there's probably one large bank that services most fintechs, and then probably another one or two. So it's probably two in total.
Okay.
The large banks will not service fintech. So versus the US, there's hundreds or thousands of community banks that will do this. And there's actually regulation that allows them to operate at a lower cost of capital. That makes it beneficial to actually, if you're a large fintech, to go with a smaller bank. That's why you don't see large fintechs in the US backed by large banks. I think that is definitely an issue. I would recommend any bank that's listening in Canada to get into that business. It's pretty profitable. You could power tons of fintechs and create it. I mean, what we've done on our side at Stack is we do offer kind of this bank as a service. That's our white label product, because not only do you need the bank license, but you need all the ancillary services, the money movement, and all those things around KYC. And so what the bank license provides is just a regulatory checkbox to say, okay, you are now able to operate in the country using our license. And at the end, they are accountable from a regulatory perspective, but all the kind of value add technology layer that's created is created by the fintechs. And so we package that as a service. We call it banking or fintech as a service. And that's the white label that we're doing. But at the end of the day, the buck stops with the license. And to your point, there's probably like two or three maybe in Canada you can go talk to, right? Which is a limited set.
Okay. And I guess, I mean, on that note, where do you see the ecosystem going? I guess if we were to reconvene 3 years from now, what would be kind of maybe the biggest surprise, and how would the ecosystem be different?
Maybe I can go first. I mean, anyone who's making predictions, though, of course, is bound to not come true. But I like to also voice it because in this case, hopefully we'll pay more attention to it. I do think on the Canadian front, we need to continue to be a little bit more bold, a little bit more aggressive in the way that in a lot of different ways. So I think from the regulation side of things, we're sort of dragging our feet on a bunch of different areas, and we need to really flip it and start moving to implementation. I think the ecosystem is really asking for it pretty loudly at this point. I think a lot of indicators illustrate that we should be there. I think we've been torn between kind of two worlds for a long time, saying, well, our American counterparts have a naturally competitive ecosystem. But we don't, though. I'm a big believer of competitive markets, but in the invisible hand. But I'm also a believer that sometimes that needs a little push in the right direction to ensure that we do have a competitive marketplace. And if we look on the European front, they've done a fantastic job of being able to get ahead of that through a bunch of different initiatives. I think open banking obviously is one for which we've been a little slow and getting further behind. And I was hoping that through all these conversations, we would have a more firm stance of the timeline to implementation, but we certainly still haven't gotten there. Central bank digital currencies. There's been some things in the background sort of moving, but, I'm just hesitant at this point to say, like, when's it going to come? Because this isn't something that's been studied for over 10 years. It's called Project Jasper, and been very impressed with, us taking a leadership position there. So much so, I can tell you, like, others have looked towards us, the world's and other central banks have come in, and we just pass this information over. So this is, Canadian tax dollars funding others as well, which is also great for building relationships. So don't get me going wrong, but sometimes I think we react too much as a fast follower to de-risk things. And if you're a fast follower, in many cases, especially in government, you're a follower. And at what point are we moving too slow? And that is a risk. I think our risk averseness sometimes can actually be a big risk. And we need to start looking a little bit more at risk taking. The world is changing, and therefore we have to change. And so we need to take a bit bolder stance and confidence in going into that space.
Yeah, I would say the future really depends on how things progress on the regulatory front. I would add another piece is also the access to capital, venture capital in Canada. So I know I would define it as there's probably a healthy kind of seed early, the accelerators like Jan and others. I think there's a healthy ecosystem around early stage funding to get you to seed. But once you get to like Series A, and again, the definitions keep changing. I've seen $5 million seeds, but once you're in like the 10, 15, $20 million Series A, there's a gap in Canada to get that type of funding. And then, so there's a bit of a hole there. But then at the end, like the scale-ups, there's actually quite a bit of money in scale-ups. And you saw, like Wealthsimple raised 700 million, and there's Georgian partners. There's like a lot of big scale-ups that could come in, but it's like that in between. So and we're fortunate enough now that we're part of, Credit Sesame is a scale-up. But looking back at my Stack days, it was difficult. And I think it's still the case. You could raise a seed round, you could be part of an accelerator, you could get friends and family and angels. But then when you need to get that 10, 15, $20 million check, it's very difficult in Canada. And that's why I think a lot of companies end up expanding markets to either the US. I mean, Latin America is a huge market as well that's untapped in FinTech. But it's the lack of venture capital at that stage, which means that we're going to see a lot more of the bigger scale-up rounds. So the Wealthsimples and then maybe acquisition and consolidation. But if I had a magic wand and, I could help the ecosystem here, I'd try to get more funding in at that earlier Series A, Series B stage, just so we could have a lot more scale-ups down the road, because that's going to, that we're gonna dry up in 5 years or so if we don't get that funding basically early on, right?
I would like just to add to Ranjit's point. I pretty much agree with everything he said to date, but I would say that the seed side, I do think there is not enough capital there. We've seen it, and just because we've supported a lot of early stage companies, and we find ourselves more often than not kind of by ourselves, really pushing and spending a lot more time than we think is necessary to fund these. We, in Canada, again, risk averseness over risk taking. It's a cultural thing, and it's across the board. So I picked on the regulatory side. On the capital side, it's still the same thing. I think the way we expect kind of unit economic numbers at a seed stage, in which that's Series A sort of play. We're asking them to look and be profitable and all these things, and at a seed stage investment. And in the US, I mean, seeds is we're expecting 1 to 3 to 5 million in some cases, and those are proper seed stages. So how are we financing this to give them the proper chance? And it's not just at necessarily where are the LPs then to fund the funds to then invest into those companies? We have a kind of a lack of a competitive LP base here right now, and it needs a little support. It just has to do, like if you were to raise a fund right now, I can tell you through experience, a lot of the LPs that are there have already deployed capital in numerous funds at this point. And we're kind of like, well, do we need more? And I'm like, we do need more capital into the space right now. Canada has always been, for a long time, the initial way it got started was government intervention into the BC landscape. And I think we're going to need more of it to continue to build a competitive space. We have seen it on the different provinces create more of this. And we've seen it in the federal government's also looking at this as well. Some of the challenges, though, of course, when you're building these funds, though, they come with government restrictions, which makes it very challenging because in some cases, the rules of what they require to how to establish impede the profitability of the fund or the strategy of that fund manager. And so we're kind of hurting right now emerging managers. And if you were to look actually across the board, especially in the US, if ever in the last 15 years, 50% of the time, it's emerging managers that are in the top 10, 15 of performance. And we just don't embrace the term emerging managers here in Canada. I think we're looking for people with any track record, good or bad, to just keep reinvesting into those versus like trying to foster new players to come in. So things to solve. We're kind of trending slowly in the right direction. We've come a long way, so I don't want to say that it's not. And I know it's the best time more than ever to be a startup, but there's still a lot of room and hope that by sending this message that we're going to get more LPs to participate and more funding into much needed startups.
Yeah, just to add, and I agree with Jan. I think he's closer to the seed area, but yeah, when I was thinking back a couple of years ago when we were fundraising at Stack, it was so different. You go to the US funds, it's like you go to the Canadian funds, it's like you're being too bold and aggressive, pare back your estimates. You go to the US funds with the same deck, and it's like you're not aggressive enough. And it's like, okay, so that was like a perfect example of the conservatism in Canada. But I think it's still there. Like Jan would be closer to it. I think it's getting better, but there's still a gap. And I guess it extends down to the seed. And I especially with FinTech, we're not going to be profitable early on. You look at some of the biggest challenger banks like Chime and others, they're not profitable till very, very late stage. And so asking at a seed stage, or even Series A stage, to have that type of financial metrics for a fintech challenger is very difficult, right? It almost kind of stunts your ability to grow.
Okay, so I think we know what the secret sauce is to a more successful Canadian fintech ecosystem in 5 years. So being a bit bolder, greater access to capital across all stages, some support from the regulator, but nevertheless, I mean, it seems that, there's been a lot happening in the past 5 years. Seems that it's, everything's kind of on the way forward, thinking about, what Canada's done with the CBDC research, also, looking further into open banking, and again, being creative and being able to access lots of different markets. So yeah, super interesting to dive a bit more into what's happening in Canada. So yeah, Jan and Ranjit, I'd like to thank you both so much for joining us today. Ranjit, where can our listeners find out more about you and about Credit Sesame?
So we are in Canada. It's getstack.ca. We still operate a Stack, and you can download the Stack app. I encourage everyone in Canada to get a Stack app and get their no-fee banking and rewards at the same time. And if U.S. listeners are there, it's creditsesame.com, and Sesame Cash and Credit Sesame is there to help build your score. And we're kind of the only bank in the U.S. that helps grow your credit score. So encourage everyone to check out the site.
Super. Thanks, Ranjit. And Jan?
Yeah, feel free to check out Holt XChange.com. It's just X and then change.com. And with that, we're always looking for new advisors to join our community, because we believe it takes a village to raise a startup. So if you're a financial institution, investor, or someone who has an expertise, but care about the early stage fintech, the next wave of it, this next technology, this infrastructure that we're building collectively, and want to have a say in the direction it goes, encourage you to reach out so that you can join our advisor army, as we like to call it. And of course, to all the startups, always happy to have calls, no matter what, try to figure out, provide advice, guidance, anything we can through this process. And through time, see if there's a fit for us to make an investment period. We're knee deep in applications now. And every year we try to make about 8 or so. So really looking for the best companies pre-Series A that we can support, generally that are in North America or looking to enter the North American market.
Great. Jan and Ranjit, thank you so very much again. And thank you to our listeners. That was Breaking Banks Europe, episode 82, Journeys from the FinTech World, focusing on Canada.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.